Everybody, it's Al from Boston. Happy Sunday. It's 3:29 on the 5th of December, December 12th, 2021. Today's a good day. Hey, I want to talk about December. I got a bunch of messages asking if December is going to be the month for MOASS. I have no idea. I have no idea. I hope, I pray. But let's talk about a scenario where MOASS does happen and it's by market crash, right? Let's talk about the market as of late. So the past few days, we have seen everything turn red. I mean, ghastly red, right? We know that there's going to be a massive correction, and I do mean massive, and it's going to shock and awe a lot of people, and not on top, not including the fact that Evergrande in China is just completely, just utterly bombed out. I mean, it's going to be over. It's over for them essentially. We're just waiting for the cascading effect, and it looks like the Great Reset actually is very feasible at this point. What's going to happen if there is a market crash, right? And it looks like there is. I'm hoping that it's sooner rather than later, so we have a great Christmas, or at least we start. It's the trigger for the MOASS, right? All the analysts, all the major analysts, and all the networks, TV networks, as well as Barron's and some of the major financial networks are calling for a negative outlook, and that's what I've seen. I've seen a lot of that, which is a trigger for us because it's MOASS. How is it a trigger time? All right, let me explain. A full and complete crash without the aid of further collateral to rebalance the collateral for the loans for them to short us is what I'm referring to. The smaller hedge funds, remember we talked about how there's a bunch of different hedge funds. I'm going to include GME in this, right? Because there's a lot of them. There's two main divisions of hedge funds, right? And one is a market maker. The rest are like Jane Street, SIG, Goldman, Bank of America, who are in the Bank of America, who are in the GME play. I want to talk about the smaller funds in both, right? If this MOASS is going to be triggered by a market crash, those are the guys that are going to go down first, the small funds. And if that small fund, that very first small fund goes down, it's cascading. They start to cover. That means the price is going to go parabolic. It'll go over a certain price. Now, I have a range between $80 and $130 for that liquidation process to begin. First, but there's a sequence to this. First, obviously, it's a maintenance call, which they're probably in the process of doing right now. Last couple of days, we've seen the market go down. People are scared, and there is a credit crunch going on, meaning that the ability for them to get loans, to get credit, to buy and shorts is not really there anymore. And it's so high at a premium. Maybe I think they're lucky to do because they have the money, they have liquidity for it, but the smaller funds do not. They simply do not. And that being said, let's talk about real quick what would happen, that cascading effect. Okay, smallest hedge fund, let's say it's the tiniest hedge fund, and let's say they're running out of money. Citadel cannot give them money, right? They cannot give them money. So what are they doing? Well, probably crypto plays. They're doing puppet dumps. We saw crypto taking a shit last couple of days, a massive sell-off, and that's because they know it's coming. The maintenance and margin calls are going to be coming. If this thing keeps going down, like this month, as I think it will, you'll see a lot of irregular activity in your crypto. So keep an eye on your crypto, is what I'm trying to say. It's like at 41, 47, somewhere in that range right now, last I checked. So that tells me that anytime that there's an issue with of liquidity, they hit up crypto. You can expect it. And if that's the case, well, those small hedge funds, if they can't come up with the rest of that money, they're screwed. And let's say they do come up with the money, right? Let's say they come up with that maintenance call money and the market goes on even further, right? And then the loaners, the actual owners of that loan say to the smallest hedge fund on AMC or GME, hey, we need our money back. This is too crazy for us. Give us back our money. Oh, you don't have it? Hey, F you. Give us your longs right now. We're going to take your longs. They take all their long positions. It could be Tesla, it could be whoever, and they start liquidating them, right? They start liquidating them. What happens then? The price goes up, right? But there aren't any shares to sell. There's nothing there. Now, I'm uncertain if those those shorts that they are supposedly selling will be bought by those companies that are the like the Bank of America's, the banks that are trying to make them whole. If those are, I don't know if they can be bought. Maybe they can, maybe not. But regardless, the heavier brunt of the maintenance and margin costs are going to go up for everybody. So everyone's going to be shelling out money overall. All right. So let's hope and pray we see this month one of the smaller funds collapse, go away, maybe more. I'm keeping an eye out on my terminal, but the way I see it, if one goes down, there's a cascading effect, and it usually takes a couple days. And at the brunt of it all, the prices keep going higher and higher. Citadel will not be able to sustain themselves. They can sustain for a little bit, but when it's in the several $100s, and I think Lou from Wall Street had also mentioned this, and I think it's important to mention it to you as well. Once it hits several $100s, they're going to try their last ditch. That's their Masada moment, if you will. That is where they're going to throw everything at you to try to get you to sell, short that thing, short it, dump massive dumps, whatever, reserves. They're going to try to get that stock down in order for you to sell. And I know you're not. I know you won't sell. I know where our price is, and that's what it is. We know what our price is, where it has the potential of going. Has the potential of going if we all held to $1 million and above, right? Even if 40% of those, if 40% of all the apes sold, we'd still make $100,000. That's just the way it is. All right. That being said, if that happens, Citadel cannot be, they're not going to be able to sustain themselves. They'll throw everything they have, including the kitchen sink, and then they will be liquidated. Their longs positions are going to be taken from them by DTC, or they're just going to keep paying until they run out of money, and that could very well happen. Now, here's the thing: I don't know what kind of insurance policy these guys have. If they have like a retarded amount of insurance through like Sotheby's or whatever, and they're paying monthly premiums, who knows? That could happen. I remember a couple of years ago in Massachusetts, we had this company called Jordan's Furniture. Jordan's Furniture said if the Red Sox win the World Series, all the furniture you bought in 2004 is free. They took out a massive insurance policy. Wouldn't you know it? Sotheby's had to come up with $1.4 billion to pay it all back, because the Red Sox won that year. Insane. So who knows? They might have an insurance policy. They might have some weird umbrella policy or something that says, hey, if this happens, this is what we'll pay the amount. Who knows? I don't know if that's even possible. If there's any kind of insurance that does that, feasibility wise, I don't know who's got that kind of money to do it. But if they do, they might live to see another day, another trading day after the MOASS is over. Nobody knows. It's just one of those things. But we want to see them liquidated. We want to see them gone and completely just annihilated. If that doesn't happen, no big deal. As long as we get paid, we'll be fine. But they can do one of two things. The DTC can confiscate their longs and hold on to them, which is probably a smart bet. I wouldn't bother selling those things. I would pay the tab myself and keep those longs for later, and then just keep making money off of them until that debt's paid. And I would obviously ding whatever's left of Citadel and the owner, what's his face, Mr. Griffin. That being said, I want to take a look and talk about really quickly the negative beta correlation with Bloomberg. So the last couple of days, I noticed how the beta on different sites are different, right? Bloomberg's got it at like a little above 1% or 1%, and like FinViz or Fintel, somebody had it at -9, -10, and they're such pieces of shit. These guys on Bloomberg, I know Bloomberg's manipulated. I know this for a fact, okay? Because when the last couple of days, when that red market started to really creep in and the Dow was dropping and the S&P was dropping, there's no way it's possible that AMC stock could correlate as explicitly as it was in mirroring the S&P 500. Why? They were dropping us intentionally to make it appear that we were on the same trajectory, the same mark as the S&P. Why? Because they don't want other institutions knowing about it. Their biggest fear is not just retail, it's institutions buying in, right? Their institutions are terrified They don't want these guys coming in. Another pension fund. Can you imagine the risk officer at Citadel right now? They're probably pulling their hair out. They see another institution buying in. So what they do is they go to Bloomberg, they give them bad data. It looks like it's this, it looks like it's that, and it looks like it's correlating with the S&P 500. When in reality, it's got a negative beta of 10 or higher. I thought it was somewhere between 9 and 10 myself. I did it a couple times on the computer using on an Excel spreadsheet using finances from Yahoo, and it didn't make sense to me. None of it makes sense, and it shouldn't make sense because it's all that data is corrupted. All right, so when this thing is finally over and that market does crash, believe me, that treachery, that fuckery, if you will, forgive me, will be going away, and it will correlate with. And this is another reason why to sell early, guys. We do have a negative beta, and when the market does take a really nasty dip and it crashes, it actually crashes. The MOASS, with the addition of the negative beta and the stock market crashing, it doesn't make sense to sell 15,000. It makes no sense because everything is going to be pushing it upwards, right? It makes perfect sense. And here's the thing. It's like when you look at all the other betas that are positive betas, it's like you're asking yourselves, these are unlevered betas, right? And unlevered betas, when they take away all the good and bad effects and debt to the firm and its capital structure, just to give it a bad number. Yes, it's done in finances. It's more done in like mergers and acquisition finances. It's an M&A thing, and why it would be appearing on a Bloomberg terminal is very interesting to me. It just doesn't make sense. The only time I've ever used levered up and unlevered beta as examples were in mergers and acquisitions. That's the only time I've ever seen it. I don't see any other reason for ever use it other than those two reasons, other than that particular class. So that being, and of course, private equity, I understand they use that. But look, for stocks, I don't think it's necessary. I think Bloomberg's manipulated. I think in some respects, the other companies are probably correct in this. We have to be discerning people on this, right? We have to discern which is right data, which is bad, based on our experiences and what we've seen in the market and what's bullshit and what's real. Remember, the name of the game is to get you to sell early. The name of the game is to make sure institutions don't buy in. That's the game, right? They want you to sell early. They see, oh, this has a capacity of, a maximum capacity of, $15,000, $30,000, $5,000, whatever, a couple hundred, and that's it. That is the biggest lie ever told. It's just a lie. So I hope you guys stick with me when it comes to that, and I'll bring some more content up in the next couple of days. But I wanted to show you this whole thing about negative beta in December and why it's looking good. It's looking positive. But remember, if it doesn't happen, it doesn't happen this month. It's okay. It doesn't mean you don't need to freak out or whatever. There's no reason to. Finally, I'm also kind of hoping that Ryan Cohen drops his NFT load this December sometime. It's only the 5th. He's got some time. If he drops it on a certain day, like the day they're getting margin called, or the day that the market's really crap, and Citadels and the rest of these guys have to come up with more money, well, that would be that would cause a MOASS. So I always keep Ryan Cohen in my back pocket for that reason. So I hope you found value in this video. If you did, please share it, subscribe, and I'll see you later. Alpha and Boston signing out. Bye.